Hello and welcome to Insurance 101. I'm Christine from the Tillett Agency, and today I'm here to help you understand one of the most important steps in buying your first home, which is getting homeowners insurance. Now, let's start with the basics, because if you're getting a loan through a federally backed mortgage company, you must have a homeowners policy in place before you close. Now, that's because the house is the bank's collateral, and if something happens like a fire, they need to know it's protected. So let's do a quick overview of the process. So once you're approved for a loan and you're working with a real estate agent, you found your dream home, and now it's time to reach out to an insurance broker. After your offer is accepted, we'll get you a quote, send it to your mortgage lender, and then work directly with them to finalize everything for the closing. Your first year of homeowners insurance is paid at closing, usually through your closing costs. So now let's talk about what a homeowner's policy actually does. In simple terms, they just promise to pay for sudden and accidental damage to your property. Now that includes events like a fire, lightning, windstorms, hail, explosion, vandalism, theft, even if a car or an airplane hits your house. Pretty wild, right? But here's what it doesn't cover. And this is where a lot of people get tripped up, because it doesn't cover maintenance issues. So if your roof is old, you have rusty pipes or peeling paint, it also won't cover pest damage from termites, rats, or birds. So be sure to get a pest inspection and make sure you're safe. Now, there are some big events that require separate coverage like flood, earthquake, and mudslides. These are not included in standard policies. And also, if you own valuable jewelry, be aware that most policies only cover up to $1,500 per loss. But the good news is you can add extra coverage for all of these things. Now, when you get your quote, there's one page you'll want to understand well. This is the declaration page. This is where all the key information lives. So let's break that down. So coverage A is the dwelling coverage. That's the amount it would cost to rebuild your home. Now, there are different types of replacement cost coverage, and this is important when you're comparing policies, because actual cash value is the cost to rebuild minus depreciation. Replacement cost covers the full rebuild up to the limit in your coverage A. Then you can get extended replacement cost, which is the limit in coverage A plus an extra 25%. The best policy, and not all companies offer it, is guaranteed replacement cost. It covers whatever it costs to rebuild, no matter what. There's no cap. You'll also see other coverages on your declaration page after coverage A. So coverage B is other structures. So if you imagine you're a giant and you rip your house out of the ground, everything left in the yard is your B other structures. So you might see a fence, a rock wall, detached garage, a shed. You really want to check that limit if you have a lot of other structures on your property. Coverage C is your stuff. So shake the house upside down. Anything that falls out is your furniture, spices, clothes, all of these things. The limit that they give you is a percentage of the dwelling. So you don't need to worry about decreasing it. It just comes with it. Only if you have large collections and you need more coverage do you need to worry about that number. And then there's loss of use. So if your house burns down and you're having to rebuild, you still have a mortgage payment but nowhere to live. So the insurance company will pay for you to stay in a hotel or a house or Airbnb while that damage is being repaired. Then you have medical payments to others. This is if you're not liable. So if somebody is walking up the stairs and they roll their ankle because they have weak ankles, they may ask you to pay for their medical bills because it happened at your house. Now, liability coverage is very important because if somebody gets really hurt at your house, this could be very expensive. Let's say they trip on a hose or fall off your balcony, fall through the steps. They could sue you for a lot of money, hundreds of thousands of dollars. So it's very important. I recommend that you have at least $500,000 on this limit. Now, if you need more than that, go ahead, but I wouldn't go under it. And then there's the deductible, which you pay out of pocket per claim. So you'll see that listed on your declarations page too. Now there's also many things that can impact your premium. So they look at things like your credit, the age of your home, your zip code, even the fire protection class for your area. So how quickly the fire department's gonna respond to you. So what should you keep in mind when you're shopping for insurance? Well, first, do you trust the agent that you're working with? I mean, that's pretty important. You wanna make sure they're giving you what you ask for. And then you wanna check the Washington State Insurance Commissioner's website to make sure the company you're working with is reputable. Then you wanna compare the different pieces of coverage on your declaration page. You have dwelling limits, the deductible amounts, replacement costs, the liability coverage, and then every company is different. So I recommend comparing at least 2 options. But don't forget to ask about bundling with your auto insurance or ask for other available discounts. Now that's it. I hope this helps you feel more confident and informed. If you have questions or you want help with your own quote, I'm just a call or an email away. Thank you for watching and congratulations on this exciting step towards home ownership.